In 1.5 years, it is showing a growth of around 35%. I can invest as small amount as 385, 390 rupees and be a part of a REIT.
US as a market has more than 190 REITs.
REITs.
India has just 4-5, right? What's your take on this sector in general? How will this grow?
If tomorrow I am going for REIT, no, I will not go for one of them. I will go in all of them.
Given that it's regulated by SEBI, are there any risks that you see with REITs today?
I know of people who are earning 60 lakh, 70 lakh per year just by doing farming, tax free. I have invested 1.5 lakh. It is a company that is going to look after a whole farm. One of the major risks involved with a real estate stocks are change in state government. You want a regular income, then out of the two, go for REITs. Directly buying of land, there is no major regulatory body. And that's why frauds also happen to a great extent over there. I will not suggest anyone to buy a residential property for investment. Never.
Hello and welcome to Power Academy. In the last video, we talked about fractional real estate through Maulik's personal journey of investing over 1 crore in this. Let's continue our discussion on real estate, and in today's video, we will talk about 1. REITs versus real estate stocks. What are the risks and returns? 2nd, how to choose a REIT. 3rd, how to invest in farmlands. And 4th, residential versus commercial real estate. What are the risks and returns? That being said, let's get started. Hi Maulik, welcome back. In part 1 of the video, we covered a lot on fractional real estate. I think it was a good balance of someone with a decent ticket size and very good returns. Now let's move to the other two asset classes in real estate that we spoke about. One is REITs and real estate stocks, and the second is land. Let's start with REITs. And to start with, could you explain what REITs are?
So REITs stands for Real Estate Investment Trusts. Okay. So there are developers and there are companies who come together and they develop multiple properties. And then the overall valuation exceeds 500 crore and then they register with the exchanges, and that's where REITs come into existence. Right now in India, there are 5 of them that are already listed.
Yeah.
The first one was listed in April 19, Embassy one, and its price is right now around 385, 390. So I can invest as small amount as 385, 390 rupees and be a part of a REIT, which is not the case with fractional ownership in today's world. So here, as they are already on the exchanges, so they are traded like a normal share. Here what they do is, as I told you, it is a multiple properties. For example, Embassy Park, no, they have got MNC offices, they have hotels, they have healthcare centers, hospitals. So they have different such properties in which they have invested, given on once again rent, and they are generating a rental income and obviously the property. There are certain basic rules for REITs. One of them is every quarter 90% of the generated income have to be distributed.
Okay.
That is a rule. There are two main types of REIT. There are various types, but in India, if we call two main types, listed and non-listed.
Okay.
Listeds are good one because they are quite liquid.
Okay.
Yesterday,
the 5 listed that
the 5 listed
India
ones.
has
Yes,
now.
yes.
Okay.
If you want regular rental income, this is another option with you. With a lower amount of investment compared to fractional ownership, with a SEBI regulation and much more liquidity compared to fractional ownership, because you can sell it as a share and it is having a good amount of volume.
Okay.
For Embassy itself, yesterday I saw it was around 20 lakh that was traded. So quite a good amount is traded.
Right.
So that is how REITs work.
Understood. How much returns should one expect if one is investing in REITs?
Returns, see, for the last 5 years, we have got around 5 of the listed REITs, okay? And their XIR of your last year, if you see, no, they are varying to a great extent. One of them has given around 6 or 7% XIR are shown on their website. Two of them are around 11.5 to 12%. And the latest one, Nexus, which was just listed last year in March or April 2023,
Hmm.
In 1.5 year, it is showing a growth of around 35%.
Right.
But on an average, we can expect around 13% of returns over here.
Understood. Now we see the variation across the 4 5 REITs that we have. This is, under like less than the Nifty returns.
See, Nifty for last 2 3 years, it is on a different planet, honestly speaking, right? Practically speaking, we know it's not going to be
Hmm.
there, right? So if you are looking for a good amount of appreciation, an average around say 12 or 13% of appreciation over a longer period of time, with a regular income of rental yield and a lower amount of investment, then this is one of the good investment. If we talk of just embassy, till date it has given dividend amount of almost 125 rupees in 4.5 or 5 years, from
Okay.
April 19 till today, and it was listed at 300 rupees. Today it is 385.
Okay.
So if I had invested say 300 rupees in April 19, and today also if I am holding it, then around 125 rupees I have got in the form of dividend, and 85 rupees is the price appreciation.
Okay.
Also, it will also have volatility because it is listed. So if there is a volatility in the share market, it will impact. But here the risk to the company itself is less compared to a real estate company. Here it has given on rent the properties,
Right.
right? A real estate company will be a different thing. It is building the properties. Its selling takes place or not is a different thing.
Understood. Understood. Now there are 4 5 REITs, right? How do I, as a retail investor, assess these, and where is this information available? Could you help with that as well?
On each of their website, they have to clarify where they are investing, in which different properties they are investing, what is the holding percent, what is the tenant, and all things. If you want to invest in a REIT, no, first look at the company, which cities it is operating.
Okay.
Multiple cities,
Yeah.
it's a good thing,
Hmm.
because any one city can have a particular impact
Hmm.
for any point of time. But if it is spread out, that also risk get mitigated. And over there also, if it is in multiple properties, means that much risk becomes lesser, lower. Another thing, let's say their total rent is coming per month 50 lakh rupees from all the properties for any one particular REIT. But out of that, if only one of their properties is giving them 25 lakh as a rent, and their another 15 properties are giving 25 lakh rent, then it's a riskier one.
Yeah.
Because if that one property will not perform, your REIT is not going to perform.
Correct.
But if there are 30 properties and it is nearly distributed evenly, that from each of the property on an average they are getting, let's say the highest one is 3 lakh rupees and the lowest is 1 or 1.5 lakh rupees,
They are also
then
diversified.
over there diversification yes is coming, and over there your risk gets mitigated. It depends upon us how much we want to diversify. If tomorrow I am going for it, no, I will not go for one of them, I will go in all of them, parking some proportion in each of them. Because if you look at last 1 year, let's say in September 2023, I parked 1000 rupees in Embassy, 1000 in Brookfield, 1000 in Nexus, and 1000 in the other one. Of the XIRR that is available, if you take out, no, it will be giving me 17% return
Across the 4.
across four of them.
Okay.
So when I am not sure which one is the best, no, there's nothing to lose in any one of them. None of them is going to go bankrupt, that is sure. There will be a person who will say, no, no, I will go for Nexus because it is at 35. But last September, no one was knowing that it is going to give you 35.
Yeah.
And there will be someone who will say, I will never go for Brookfield because it has given only 6 or 7.
Yeah.
But last September, I was not knowing, no.
Yeah.
So diversification should always be there. It will always give you average returns, if not more average, but it will never make you bankrupt also.
Yeah, a very interesting take. I think lots to learn here. Like fractional, is it the same taxable
Yes,
as per the income tax slab?
same tax
Same.
applicable to your own tax.
Okay. And given that it's regulated by SEBI, are there any risks that you see with any retail investor investing in REITs today? Because it's still booming.
Quite,
There's not a lot of
it is
retail
quite
investment.
early days. See, in
Hmm.
India,
Yeah.
REITs are quite early days.
Correct.
Very less information, very less availability of knowledge is there. So at this point, if we talk about risk now, the major risk over here is the developer and the company holds the property. That is where you have a major difference between fractional ownership and the REITs. Okay. In REITs also, you are as an investor in a property is a different thing, and you are a shareholder is a different thing.
Yeah.
Both are different thing. We are talking more of a shareholder over here. As a shareholder, when we are looking at it, how the company is performing, we should look at its track record. We should be going for its quarterly results and all. Also, don't just be happy by getting the dividends in your bank account. That yes, I got 6 rupees, 7 rupees dividend and fine. How the company is performing, that also you should be seeing. Because as I told you, 90% of the income have to be distributed. It is distributed in 3 different forms: dividend income, other income, and the capital that is being invested by the investors, that also the company can give back. There is no such law that how much an investor who has invested, let's say you, me, and others over here, we all have invested, let's say 500 crore, and we have set up a REIT. This quarter we had a profit of say 100 crores. 90 crore we need to distribute, that is the law. But that 90 crore I need to distribute as a dividend income only? No. It can be as a dividend income, other income, or we the investors can also take 45 crore from it, and the 45 crore can be invested, can be given as a dividend and other income and all. So no fixed law pertaining to that exist.
Oh, okay.
And that is why only certain companies are such who are giving back more as a dividend. Certain are such who are giving less as dividend and giving more back to its investors, the original investors.
Okay.
So that is something where clarity still does not exist, honestly speaking. Another thing, there are higher management fees over here compared to the fractional ownership and other things. No, here the management fees that are being charged at this point of time, I feel they are on a higher side.
How
And
much is
it is variable. Once again, it's variable from one to another REIT. Because of that higher charging, what happens is automatically your profitably comes down.
Okay.
No,
Right, right. And I think REITs, real estate, that's all a function of how real estate will grow in a country.
right.
And US as a market has more than 190 REITs.
REITs, right.
India has just 4 5,
Right,
right? We're
right,
just starting.
right.
What's your take on this sector in general? How will this grow?
No, we are going to grow. REITs are going to grow, and along with REITs, as I told in the fractional ownership also, now we are going to come with SM REITs also, which is nothing going to be but a subclass of REITs only. It's going to be a subset of REITs only. For a smaller property and a single property, it will be SM REITs. For a larger pool of properties, it will be REITs. Okay. When your interest rates are coming down, your fixed deposits are not going to give you good hefty returns. So there is going to be a one class particular people who want regular income. The aged people or the retired people, they always will require that. No, for them, these all things are going to, because it is going to give you dividend every 3 months. That's a sure thing. So regular rental income is there. Another thing, even if I have some good amount, why I will not buy my own property and go for these REITs or SM REITs? In your own property, finding a tenant, he's defaulting chances, he's leaving the premises, finding another tenant, in between the property remains vacant, the paperwork and all. It's quite a hectic headache thing. Here, you directly just invest the money and you are getting it.
Yeah.
In your account every 3 months, a fixed amount of dividend.
Correct. Management is taken care of by the company.
Companies, right?
Fair.
So now what people want is, if I am getting easily some money,
Yeah.
they are ready to give 1% of their earning.
Understood. Understood. REITs are essentially for properties that are already made and versus
Already on lease.
On lease. Versus you can also invest in real estate company ke stocks.
Right.
Now, DLF
Right.
just made like more than 400% profit. What are like the advantage and disadvantage, of course, of stocks, real estate stocks versus REITs here?
You want a regular income? Then out of the two, go for REITs. Real estate stock, I will only suggest you to buy if you know in and out of that company,
Hmm.
if you know how to read the balance sheet, if you know in which areas, which cities it is going to go for its project,
Hmm.
if you know what land bank it possesses, the price of that land bank, and most importantly, its existing properties, are they selling at a good rate or not? The one of the major risk involved with a real estate stocks are change in state governments.
Hmm.
In many states it has happened that whenever a state government changes, the laws changes also dramatically, and then it can be harmful for few companies also. So all these things come into consideration over there
Hmm.
when we are going for a real estate stock. If you want to directly go for equity, no, rather than a real estate stock, I even will suggest go for a mutual fund, a thematic mutual fund of infrastructure or a real estate, because
Okay.
over there also it will be distributed into
Hmm.
10, 15, 20, 25 companies.
Right.
Here, if you are investing in just one single stock, means either it becomes a
Hmm.
hero or it becomes a
Zero.
zero. You called off DLF 400%. Same DLF in 2008 from 1200 came
Yeah.
down to 400, I think so. I'm not sure about that price, but it came down drastically. That's what I know because I had just entered market at that point of time. So how many of them people would have hold it who have bought at 1200, and if it has gone to 600 or 500 or 400,
Hmm.
are they holding it today also? And even if they are holding it, even after such a bull run, are they still in profit after this many years? That is also a question, no?
Right.
So directly investing in a real estate, according to me, is a big risk unless you know in and out of that company.
Right. So, I think lots of points covered here, right?
Yeah.
I think for a person who has lower, capacity to invest and wants some exposure into real estate, I think REITs and real estate
Yes.
stocks are two ways to enter and have that exposure.
Yes.
Now, that's for the people who want to do a small ticket size. The other spectrum is investing in land, which is a big ticket size. And since you have also been through that journey when you purchased
I
your
had just purchased a house. Yes.
house, and then we were talking about the farmland as well.
Yes.
So I think let's talk about investing is in land as an asset class.
Right.
What was your journey, and now with the current farmland investment, how did you assess that?
No, my farmland journey is I have just invested 1.5 lakh.
Okay.
It is once again a company that is going to look after a whole farm, and we are a pool of people who have invested over there.
Okay.
I don't have any direct investment in land on my name directly.
Okay, how does that work? Like, it's also like a fractional
Yes,
ownership of
it's a
sorts?
fractional ownership.
Okay.
They are going to grow crops over there, and they are going to have good amount of returns from it.
Okay.
And they are going to give me say 7 or 8% returns once again quarterly.
Okay.
And after 5 years, 7 years, they will sell that particular land, and once again appreciation of the land, that also I'll be getting. So they are also targeting 16 or 17%.
Okay, so that's pretty much works like fractional
Fractional
real
ownership.
estate.
But here it is a farmland, no
Yeah,
commercial building.
got it. What's the portal through which you? Oh,
It's called FAAB, FAB.
okay.
It's a Mysore based company.
Okay. And since you've now had some exposure, and I'm sure you would have done the research. In terms of farmlands and non-farmlands, what is the difference in the yields that the two lands give? Any?
Yields is never a surety over here. First
Hmm.
thing is that in Vadodara itself, I have seen one of my father's friend
Hmm.
in 2011 he sold his own land at 300 rupees. After 1 year, he bought it back at 500 rupees. After another 2 years, he sold it at 800 rupees. After another 2 years, he bought it back at 1000 rupees. And after another 2 years, he sold it at 2000 rupees. This is
Right.
a real life example which I have seen and I know.
Okay.
4 times
Yeah.
he sold and bought
And
his
what?
own land back. And every time he has appreciated. Now, if you will see, At what price he had bought initially, that I don't know. He first sold at 300, that I know. But final amount he sold was 2000. See the appreciation.
Yeah. This is across how many years?
Almost 10 to 12
10.
years, I think
Okay.
so. 4 or 5 different transactions across 10 to 12 years, right?
Mhm.
Against that, I also know of my another friend who has got a land since 20 years and it has hardly appreciated because that particular road or area is not just progressing for various
Yeah.
reasons.
Right.
So, if you are going for buying of a land, it should be a total spare money
Yeah.
where you are having no surety that you will be getting back that money after 5 years or 10 years. Yes, if it's an agricultural land, you can do farming, and that is where also many people want to go into it because the farming income is 100% tax free, zero
Right.
tax. And
Right.
I know of people who are earning 60 lakh 70 lakh per year just by doing farming,
Tax free.
tax free. Someone earning 50 lakh by doing another business, and someone
Yeah.
earning 50 lakh by doing farming, he has to pay zero tax. That person will have to pay almost 15 to 17
Yeah.
lakh rupees of tax, no?
Yeah. The
So
pain.
yes, and day by day the farming is going to grow because population is increasing,
Hmm.
the demand for food grains is going to increase,
Yeah.
and farmers are decreasing.
Right, right. So, in terms of assessing again, the location, how did you, what was your framework of, okay, this is the right place to invest in? Any framework, any metrics you used to compare different properties?
When we talk about direct farmland, no, I'll
Hmm.
just try to go for the rules what exist and all. There are two type of land:
Okay.
agricultural and non-agricultural.
Okay.
Agricultural land can be bought only by someone who is a farmer. How do you classify as a farmer? Once again, state to state, the laws varies.
Hmm.
Okay. A general rule is since 1954, your father, grandfather, forefathers' name should be there in that particular document. It is called 7 by 12 document.
Okay.
Okay. Then you have got Form 8A. Then you have got title clearance report. So there are various such papers that you need to first check for any particular land before buying it. If I am a farmer, I can buy a farmland also, I can buy a non agricultural land also. But if I am not a farmer, I can only buy non agricultural land.
Okay.
I cannot buy a farmland.
Okay.
In 2 or 3 states, that law has been changed.
Okay.
Even a person who is not a farmer can also now buy a farmland.
Okay.
In Karnataka, for example, as I told you, the investment I have done,
Yeah.
over there it is not that I need to be a farmer or not, because that is a special law where a company is holding the whole land
Okay.
and it is pulling money from us.
Okay.
In Gujarat, just before 2 weeks, the law has changed. Now you don't need to prove that your forefathers were farmers since 1954. From 1995 onwards, only if you have the paper, it will do. So
Okay.
it is changing from state to state. Directly buying of land, there is no major regulatory body. We have got RERA, okay, but that is mainly for the construction and all. Directly farmlands and all, there is no major regulatory body, and that's why frauds also happens to a
Yeah.
great extent over there.
Yeah.
And that's why whatever I said regarding that 7 by 12, 8A, or the title clearance report and all, the paperwork should be quite perfect, then only buy a land. That is the first major thing. Apart from that, when you are buying a land, look at which area you are buying. When you are buying a land, you are buying for price appreciation. Okay.
Yeah.
Generally, if you are buying a land which is just outside your corporation area, within next 5 or 10 years, that is going to come inside your corporation because the cities are going to expand. If you go to Mumbai, Navi Mumbai is developing. Now, outside Navi Mumbai, whatever villages are still existing, after 5 years or 10 years, now they will also be coming inside, no?
Right.
So that's where the appreciation comes. Second thing is going to be the area that you possess. if it's a manageable area, smaller area, you can easily sell. Bigger the land, more the amount, more the illiquidity,
Hmm.
because it will be
Right.
difficult. If you want to sell a 10 lakh rupees land, you will get easily someone.
Hmm.
If you want to sell 1 crore rupee land, it is a difficult thing.
Hmm.
Over there also there are installments, that payment will be done 30% now, 30% after 3 months, 30% after 6 months and all. So this is a major factor.
Understood. Understood. So, what has your experience been in terms of rental yield? I think we spoke about when you bought the house and you had put it on rent. That was also a kind of land
Yeah,
investment. What's your experience been there?
4 or 5% maximum rental yield. You
Hmm.
don't get residential rental yield nowadays unless you are in cities like Bangalore or Hyderabad where IT people are there. No, they are giving you good amount of rent. Others are not giving, so we don't
Hmm.
get that good amount of rent. No, otherwise residential you are not going to get good. I will not suggest anyone to buy a residential property for investment.
Hmm.
Never.
Right. Because the yields are
Yields
way
are
too low, it
too low,
doesn't
too low.
justify.
Unless you want to live in that home, maybe a weekend home or anything, and you are going to go and live over there, then it's a different thing. But if you are going for investment purpose, I will never put a money in any residential scheme, because
Got it.
the yields or the appreciation, none of them
Hmm.
are going to be matching to any of the existing one.
Great. I think across the two-part video, we covered real estate for everyone.
Great.
Someone who wants to start with 100 rupees to someone who wants to invest in, a 10
Crores.
crore land.
Yes.
So it's been super helpful. So much to learn from real estate stocks, REITs to fractional real estate investing, and now the land.
Right.
The full spectrum. Thanks for sharing all the details.
Yes.
Final question, and your take on across these different asset classes. As a retail investor, how should I select this particular asset classes for me?
First thing is your corpus. Second thing is, do you want a regular income? Third thing is the for how much amount you want to invest.
Hmm.
Fourth thing, are you ready if you don't get your investment back for next 4 years, 5 years? Depending on these all factors, you should be choosing either of them. Okay. So I always think it should be a part of your portfolio once your portfolio becomes above certain level,
Hmm.
and as you grow older.
Hmm.
Regular incomes at times plays a crucial role.
Hmm.
For me also it is there. Even though I am earning still,
Hmm.
I am
Hmm.
doing my work and I am earning. But still I have got that, yes, I have got around 95,000 or 1 lakh rupees as a regular rental income going to come every month. Means at the back of my mind I know that for next 1 month if I don't do anything,
Yeah.
still my household expenditure is
Taken care
going to
of.
be taken care of.
Yeah.
So that's where once you cross 40 and all, no, these all things become important.
Got
So
it.
real
Uh,
estate should be a part of your portfolio as you grow older. Which one depends upon individual's choice,
yeah.
but always diversify. I have been in that way only. I love diversification
yeah.
because that gives me a great peace of mind, honestly speaking. Final disclaimer, whatever we have talked, that is to the best of my knowledge. Somewhere in some state, there can be some different law also. So don't think whatever I have saying is going to be true across pan India. Do your own calculations, deep dive, get the total knowledge, and then only invest. Any of the educational
Yeah.
institutes in which students are in the final year and next year they are going to step into professional world, I am ready to do seminar free of cost for them also. And for a teachers, any institute whose teachers want any guidelines, for them also free of cost I am ready to do. Okay.
Great. I think this couldn't be better than this. I got so much to learn from you today. I think it's been wonderful. Thank you so much
My pleasure.